Good afternoon, everybody. We'll just give it a moment or two for more participants to join us. We can see the number of people online increasing rapidly all the time. So I'll just give it another 20 seconds and then we'll kick off. Okay, well, it's just gone 4 o'clock. So thank you all for logging in and joining the annual GRESB infrastructure results event for 2021. My name is Mike Atkinson from GHD Advisory, and I'm delighted that we are able to host the event online for this second year. I'd like to start with an acknowledgement of country. So in the spirit of reconciliation, we acknowledge the traditional custodians of country throughout Australia and Oceania and their connection to land, sea and community. We pay our respect to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. I'm calling in from the beautiful Northern Beaches area of Sydney, which is GIIA country, the land of the Gadigal people. I acknowledge the traditional owners and custodians of the lands on which I live and work. I'm also pleased to announce that GHD's new Reconciliation Action Plan is being launched tomorrow. This will be our third RAP, and I've been allowed to steal one of the new bits of artwork from our RAP to sit behind me today. So if you'd like to come along to that, please, I suppose, look out for GHD's social media or LinkedIn posts to register for that. Also joining us today from GIIA country is Romilly Madu. Hopefully you're at home today. So Romilly is the CEO of Infrastructure Australia, and she'll provide an introduction to today's event shortly. We'll then have a panel discussion, which will include presentation of the 2021 GRESB results by Ruben Lungbroek, GRESB's head of the Asia Pacific region. The panel will be moderated by Ainsley Simpson, who is the Chief Executive Officer of the Infrastructure Sustainability Council, and will include Sandra Lee, Investment Manager at Infrastructure at UniSuper, Ava Hanley, Executive Manager, Strategy, Innovation and Technology at Transgrid, and Lachlan Creswell, the Head of Green Investment Group at Macquarie Capital. And finally, Ruben will present the 2021 GRESB Sector Leader Awards, and we'll be joined by John Collins from Morrison & Co. So I'm sure you'll agree it's a stellar lineup of speakers today. In terms of housekeeping, we're keen to hear from the attendees today and invite you to pose questions through the Q&A function on the bottom of your screen. We'll look to answer those Q&A questions during the panel discussion where possible. Please also note that the session is being recorded and a copy will be made available on GRESB's webpage in due course. So from GHD's perspective, one of the key themes of today's event is around ESG performance improvement. And in alignment with GRESB's largest ever increase in infrastructure asset participation in their 6th year of benchmarking, GHD has seen a market increase over the last 12 months in our clients looking to assess, benchmark, and most importantly, improve the ESG performance of their infrastructure investments. In our ESG advisory practice, we're seeing comprehensive ESG diligence as a requirement for almost all infrastructure transactions for the first time. And we've seen a significant increase in the number of requests for strategic advice on a range of critical ESG issues, including decarbonisation, climate risk, and asset resilience. Beyond our advisory work, GHD is seeing a surge in client activity across our global business, looking to leverage our technical, engineering, scientific, and management capabilities to achieve those ESG performance improvements. Whether this is raising runways at airports to mitigate against climate risk and sea level rise, designing green hydrogen production and distribution infrastructure, or changing industrial processes to substantially reduce greenhouse gas emissions. We see GRESB as one of the key frameworks for measuring ESG performance improvement, and it's great to have many of the leading asset owners, investors from our region represented on the panel and joining the session today. So without further ado, I'm now pleased to hand over to Romilly Madieu, the CEO of Infrastructure Australia, who will provide an introduction to today's event. Romilly.
Thank you so much, Mike. I appreciate it. And yes, I am on saltwater country here on the Northern Beaches. It gives me great pleasure to be involved in this event. I've had a long relationship and involvement with GRESB all the way back to when it was established in 2009, and they were in the days when I was at the Green Building Council of Australia. This last week has seen a shift in Australia at a federal level around net zero targets for 2050. Yesterday, the Prime Minister announced Australia's long-term emissions reduction plan. Within this plan, the Minister for Energy, Angus Taylor, discussed 5 principles, and the 5th principle being accountable for progress. Considering today's discussion, this principle aligns clearly with the work and reporting of GRESB. We are in what is called the infrastructure decade. Over 20% of GDP is attributed to the infrastructure sector. Infrastructure investment is at a record levels across Australia, with the Australian government committing a loan $110 billion towards projects over the next 10 years, and it's a rolling fund. This is just part of the story, with combined major public infrastructure activity doubling over the next 3 years, peaking at $52 billion by 2023. We estimate that over 430 projects worth $218 billion will be completed by 2025. Further, the case has been made for why infrastructure must align with the transition to net zero. Not only has the federal government now committed, but states and territories in Australia have all committed to net zero by 2050 or before. Whilst infrastructure spending is at record high, decisions don't systematically align with net zero outcomes and risk investment in future stranded assets. Infrastructure influences 70% of emissions. Infrastructure decisions can either lock in emissions or accelerate decarbonisation across all sectors. Investors and asset managers are increasingly committing to aligning their portfolios to net zero emissions. Infrastructure Australia has been on a really important journey in recent years to promote sustainability and resilience across the infrastructure sector. Our act is clear. IA is to provide advice on matters relating to infrastructure, including policy issues arising from climate change. We have made a clear commitment to reflect, support and communicate sustainability and resilience across our reform and investment advice. In April this year, we published our sustainability principles. In line with this, in 2021 Infrastructure Assessment Framework released in June, we embedded the considerations of both sustainability and resilience in our assessment process. Earlier this year, we also released a pathway to infrastructure resilience, which is 2 advisory papers that outline how to improve infrastructure resilience throughout planning, delivery and operations. And we did this in partnership with Infrastructure New South Wales. And finally, we've recently released the 2021 Australian Infrastructure Plan, which includes a detailed chapter outlining specific reforms focused on improving sustainability and resilience of the infrastructure sector. Further, sustainability and resilience cuts across the whole plan. Within the plan, there are 28 recommendations, 28 reforms consisting of 29 recommendations, 96 immediate outcomes and 360 activities. Within each chapter, metrics to measure progress are included. Within the sustainability and resilience chapter, some of these include natural disaster impact in people, which is the UN Sustainable Development Goal 13.11, consideration of climate risk, greenhouse gas emissions, aiming for a net zero target, quadruple bottom line, and national climate adaptation scenarios. The sustainability and resilience chapter identifies there is room for improvement. Embedding sustainability and resilience should be automatic. It's not currently. Sustainability and emissions reductions considerations are not strong enough, and the decision-making process needs to be clearer. Opportunities identified include improved governance and decision-making, and this is captured in GRESB, progress resilient strategies, be a global leader in sustainable infrastructure like we are in property and construction in Australia. And that again is proven by the GRESB results over the past years when it comes to property and construction, and reduce carbon emissions. Successful reform is achieved through working together to identify where there are opportunities or intractable challenges, learning from others, collaborating across government jurisdictions, community and industry, and adopting and leveraging best practice. And Ainsley's on the call, and I'm sure she'll mention ISCA and the IS tool and Green Building Council's Green Star. Everyone has a distinct role to play as we move from policy development to implementation. The challenge now is for all of us to work together to champion, adopt and implement these important reforms. Thank you and enjoy the rest of the discussion.
Thank you, Romilly. And perhaps we might kick off and get started with our panel. Now, Ruben, the Infrastructure Sustainability Council last week released our 2021 impacts report, and it's just incredible to see the wide variety of impacts and outcomes that are being delivered by all forms of infrastructure. Let's kick off the panel looking at some of the highlights from this year's GRESB in infrastructure results. What are the key takeaways?
Thanks, Ainsley. Let me quickly share my screen. There we go. I hope that's visible. Thanks again. And I would like to start my presentation with a quick refresh on GRESB. As some of you might know, we provide validated ESG data and peer benchmark for infrastructure investors, managers, and operators. And we do this in order to help the industry improve, adopt best practices, but also to support stakeholder engagement processes as well as decision-making processes, which in the end should all lead to more sustainable outcomes. And if I may say so myself, we've been doing so quite successfully. Over the last year, we saw very strong growth in institutional investors that use GRESB data and tools to support their responsible investment strategies. We now serve over 140 institutional investors globally, representing almost $48 trillion in assets under management. And according to my calculations, that's more than 200 times the net worth of Elon Musk. Eat your heart out. Now, it's important to understand that this weight of institutional capital is driving participation in the GRESB assessments, including the infrastructure benchmark, which took another leap forward this year. Participation in the fund assessment, I'll explain more how our two assessments work and how they intertwine. But the fund assessment participation increased by more than a quarter, while participation in the asset assessment increased by almost a third. And the asset assessment now covers over 2,000 facilities globally. And this year, we cover nearly all infrastructures, save for one, across 69 countries. And we can see that the largest region still is Europe. But this year we saw a strong relative growth in participation from the Americas, as well as in Asia and here in Oceania. So that's pretty positive news, both for the balance and the coverage of the benchmark. If we look at coverage between sectors, then absolute growth was heavily driven this year by increased participation in the transport sector and the renewable power sector, both getting around 50 new participants. And these two sectors remain the largest infrastructure sectors represented in the infrastructure benchmark. But strong relative growth also came from the environmental services sector and from the social infrastructure sector. We're also very pleased to see a strong increase in gross asset value represented by the assets that participate to almost $750 billion. Now, before we dive into the GRESB results, I'd like to quickly explain how the fund assessment and the asset assessment are linked. And trust me, it's not rocket science, it's not that difficult, but allow me to explain this in a nutshell. So assets that are held by a fund fill out two components of the asset assessment. The management component, which looks at leadership, strategies, policies, and disclosures, and the performance component, which looks at actions, engagements, outputs, and impacts. These two components combined provide an asset score. In turn, the weighted average asset scores of the underlying assets that are part of the fund make up the performance component and the performance score of the fund assessment, whereby the fund itself completes the management component. This results in a management score and a performance score for the fund, which in turn make up the overall GRESB score. As I said, easy peasy. If we look at the overall GRESB scores for the funds, we can see another strong increase this year in terms of their overall performance. And it's great to see that Oceania, as Romilly already mentioned, again, is leading the other regions. However, more interestingly, in looking closer at these results, we can see that the improvement is mainly driven by the performance component. And you can see this because the average, the regional average, global average moved on the x-axis from the left to the right. This means that the improvement in fund scores actually is mostly caused by ESG performance improvements of the underlying assets. So if we look at how the assets perform, then we can see that they too mostly improve their performance on the performance dimension. Again, the performance dimension looks at actions taken to be more resilient, to be more carbon neutral, to overall improve the performance in terms of environmental and social outcomes and impacts. I'll show you what the individual ESG aspects in which those assets performed or made the best improvements later on. But it's quite interesting to see that overall there wasn't any aspects in our assessment in which they went back in terms of their performance. This graph looks at every year how the cohort of first-time asset participants perform and how that performance develops over time as they continue their reporting in GRESB. And it shows two important things. Firstly, that when you shine a light on something, you tend to improve it. So by simply measuring your ESG performance, you have an incentive to get better year on year. And secondly, because we at GRESB communicate best practices from the leaders and share them back with the industry, it allows new participants to adopt these best practices and perform at an increasingly higher level. That's the power of transparency in ESG performance, and that's exactly what we're trying to do with the GRESB assessment and the benchmarks. Now, in terms of the aspect results for assets, here you can see how the assets performed last year, which is a dark green line, against this year, which is the light green shaded area. And as you can see, the carbon emissions aspect and the health and safety aspect show the strongest increase in terms of improvement. However, it is important to point out that currently the assessment mostly focuses on the ability of assets to report on these indicators rather than us being able to measure and score actual performance outcomes. And you can see this quite clearly from the environmental performance indicators and how participants have reported to those over the last 3 years. So across all indicators, environmental indicators, there was a strong increase in the ability of assets to report on these material metrics. And this ability to report on metrics is crucial because it allows us to move to outcome-focused scoring, from ability to report focused scoring to outcome-focused scoring. So to try to really appreciate and score and reward best practices around environmental and social outcomes and impacts. As I say, if you can measure it, you can manage it, and if you can manage it, you can improve it. Speaking of which, we recently started our work to create a shared vision, strategy, and roadmap for the GRESB assessments. And this will help us to ensure that they continue to provide value in the future, while also remaining relevant for all industry stakeholders. And we'll run an extensive industry engagement process over the next year and a half, intended to give all of our members and partners and industry partners the opportunity to take an active role in the establishment of the vision and the roadmap. We'll start this process with the development of the vision, a shared vision. So all of you here that is attending the webinar, if you haven't done so yet, please do go to our website, not now, but of course after this event, or scan this QR code with your phone to respond to our survey, which you can do until this Friday. And obviously your input is highly appreciated. That's all for me for now. Back to you, Ainsley.
Lots to look forward to, Ruben. Perhaps looking forward, I might start with you, Sandra. UniSuper is one of Australia's largest investors and has over a decade of experience in responsible investing, and also long held a commitment to incorporating ESG into your investment decisions. Has your approach changed over time? And with this increasing focus on ESG nationally and indeed globally, what changes do you foresee in your investment strategies for infrastructure?
Absolutely. Thank you, Ainsley, and good afternoon, everyone. I mean, it is true that every investment UniSuper makes considers our environmental, social, and governance, ESG standards and principles. ESG is not viewed in isolation. It is integrated into our investment process. We have a dedicated ESG team, which is integrated within the investment business at UniSuper. And today we are one of Australia's largest investors in ESG themed strategies, with more than $12 billion in funds under management across these investment options. In terms of how our approach has changed, look, it's been a journey. The process of engagement with our portfolio companies have certainly evolved over the years. There's a lot more buy-in, more commitment these days by the underlying companies. Now that ESG is no longer seen as a standalone sort of concept to have, but it's mainstream and a real central focus because it is essential for us as their owners. We integrate ESG into our entire investment process, whether that is assessing a new opportunity or managing existing assets. For example, airports are significant public assets with many stakeholders, where the principles of ESG and responsible investing are also central to the users, passengers, airlines, governments, investors, and financiers alike. Another key piece we are seeing is there is also a very intentional shift by our portfolio companies in the way that they are viewing ESG factors. There is much more strategic consideration of material ESG elements and how that impacts their business model. This is due to us, I guess, in part as asset owners seeking more specific metrics and measures to demonstrate improvements in ESG performance. And just finally, what changes do we foresee in our sort of responsible investment strategy approach? It's a combination of a few things. It's stricter screening of investments, more intense engagement with our underlying investment managers and companies, setting performance and improvement targets. Decarbonisation is a key focus across all our investments at UniSuper. So we are looking to see how our infrastructure investments can benefit or support decarbonisation of their business models and customers. This is particularly pertinent as we look for new investments. So it isn't just about screening, although that's important, but we do want to have a strategy that gets us to net zero, which will make, legacy, I guess, fossil fuel reliant businesses more challenging investments going forward.
Thanks, Sandra. It sure is the decade of decarbonisation, and Romilly highlighted some of our research, which identified that 70% of Australia's emissions are enabled by infrastructure. Eva, perhaps you can explain Transgrid's sustainability priorities and also your ambition to be a leader in the energy transition.
Good afternoon, everyone. It's great to be with you. So Transgrid's vision is to lead the transition to a clean energy future. And it's quite relevant to our business because in the most simplistic terms, transmission takes energy from where it is generated to where it needs to be. And one of my favourite phrases is there's no energy transition without transmission. And there is no shortage of transmission planned. We have a pipeline of about $10 billion of transmission infrastructure that will enable the decarbonisation of the economy. So we are, as many of the attendees today would know, the planner and operator of the New South Wales and ACT transmission system, and ultimately responsible for ensuring there's safe, reliable and clean energy available. And because of this, you can imagine we spend a lot of time looking at what the future may bring, how energy generation patterns are changing, how demand patterns are changing, and what we need to do to prepare the infrastructure, which in many cases has very long lead times, to ensure there's always reliability of energy. So what we're seeing, and we recently published our energy vision, we're seeing that the transition to renewable energy is unstoppable. We do all the connections to the grid. We haven't had a fossil fuel-based connection in years. and there's a huge pipeline of renewable generation waiting to be connected. But interestingly, what our energy vision showed is that decarbonisation can happen much more quickly than anticipated. And in a deep decarbonisation scenario, we see net zero by 2032. So there is huge opportunity for Australia and the energy system to accelerate decarbonisation, and we're playing a key role in that, hence our vision.
Fantastic to hear the vision, but also the opportunity to accelerate our decarbonisation journey. Lachlan, turning now to you and specifically thinking about the transition and green energy, can you tell us about Macquarie's Green Investment Group commitment to allocate capital to green energy assets?
Thanks very much and good afternoon, everyone. So Macquarie's Green Investment Group is a part of Macquarie Capital, our investment banking business, and is focused on investing in development of new green energy assets. So our mission is to accelerate the green transition, which is a nice segue from what Ainsley just mentioned. To date, we've committed about $46 billion either through our own assets or capital that's worked alongside us for renewable energy. We've got a 30 gigawatt pipeline of renewable energy developments globally that spans everything from utility scale solar and wind, onshore and offshore, battery storage, which is obviously a key enabler of the energy transition, and energy from waste developments as well. So we're really focused on I guess filling a gap in the market, which is accelerating the creation of new green energy assets that fulfill this the requirements of the energy transition, and I guess attracting long-term capital. So our the balance sheet that's allocated to these assets from Macquarie is really I guess catalyzing long-term investment opportunities for our clients and partners as these assets are brought through into operation.
Thank you, Lachlan. Ruben, in terms of all these opportunities we're hearing about, what did you identify through the GRESB survey this year?
Yeah, thanks. Let me again briefly share my screen. So we look at how different fund managers and asset managers set targets. And as we all know, setting ambitious targets, climate targets, decarbonization targets are crucial for the transition of the infrastructure to get to net zero. So when we look at the fund managers this year and how they've set targets and how much and in what context, then I guess it's positive to see that the majority indeed is setting carbon reduction targets. However, this graph also shows us that only 1 out of 5 has set targets for all of their assets. So it's a very mixed image. And furthermore, less than 25% has set net zero targets for some of their assets, while only 9% has set science-based targets. So yeah, if you ask me, what does it show? I would say that infrastructure managers tend to be on top of it, are setting targets, but I guess they still have quite some way to go to ensure that their assets will transition towards and achieve net zero. We can also look at how the assets responded to the questions around target setting. And it's definitely great to see that there's a very positive trend. The numbers from 2019 have doubled when it comes to target setting, although quite some commitments are needed in order to transition to net zero. And looking at how the different sectors compare, we can see that the renewable power sector is leading the pack, and perhaps it's not very surprisingly. And at the same time, also slightly decreased from last year. And that's probably due to the inflow of new assets participating for the first time this year, who still are not totally up to speed in terms of what their leading peers are doing. So I would say the results from this year's assessment definitely provide a very sector-specific picture. And with COP26 happening and regulations around decarbonization, net zero coming into place, I think it will be very interesting to see what we can expect the participants to report on in the next year.
Thanks, Ruben. COP26 has definitely highlighted the importance of climate risk, not only for investors, but indeed for community at large. Sandra, from your perspective, how does UniSuper manage climate risk and opportunity across your infrastructure investments?
Sure. As we all know, climate change presents investment risks, which requires an understanding of our exposure to climate risk and opportunities. As an active long-term investor, we expect the companies we invest in to have a proactive approach to reducing emissions, an understanding of the climate risk embedded in their businesses, and transparent disclosure explaining their activities and their actions. To that end, UniSuper is committed to achieving net zero absolute carbon emissions in our investment portfolio by 2050 in alignment with the Paris Agreement. We've also set shorter and medium-term targets that support our longer-term 2050 target. We'll target an absolute reduction in emissions at a portfolio level by 2030, where practical. We'll also allocate capital to companies needed to achieve the ultimate goal of net zero. There are three key pieces to how UniSuper manages climate risk in our investments. So firstly, through active ownership and engagement with companies. 2, ESG integration, climate risk analysis, and ongoing monitoring. And the third element, collaboration and communication with all stakeholders, including our membership base, industry advocacy groups, and the like. We also consider physical and transition risks separately for our infrastructure investments. Physical risks are particularly pertinent for infrastructure assets, as we all know, and it's important that adaptation, whether it is to rising tides or more severe weather sort of events, drier days, hotter days, it will form a part of the long-term asset plan. With respect to transition risks, we consider the nature of the exposure, but also site-specific factors that may provide a buffer or an accelerant to change. For example, the large distances between our cities will mean that airline traffic in Australia will be reasonably resilient, as there are a few alternatives to air travel. Whereas in Europe, with shorter flights, have many lower sort of carbon alternatives that are competitive on trip time. So a little bit different between the Australian context and the European context.
Really useful having that difference clarified, Sandra. Lachlan, maybe turning again to you, how is Macquarie Capital accelerating ambition into action, and do you see technology playing a really important role in achieving our net zero outcomes?
So in terms of Macquarie's role, clearly we've got to set targets ourselves, and so Macquarie's committed to net zero from our own operations by 2025, and to align our financing activities with net zero by 2050. The Green Investment Group itself has made a commitment to net zero from its investing activities by 2030. Setting targets and then obviously directing our investment activity towards those is a critical first step. But beyond the development of the green energy assets that I mentioned before, we're involved in a number of other activities to turn that ambition into action, particularly with our corporate client base. We work very closely with them in terms of a lot of providing renewable energy from our utility scale renewable assets through power purchase agreements. That's been a key feature of our business, and I guess a way of helping them respond to higher levels of ambition that they're setting themselves is as they set net zero targets or nearer term targets on sustainability metrics. Technology is absolutely a critical enabler of all of this. We've already heard the discussion around the role of transmission infrastructure from EVA, but the technology to orchestrate and get the most out of all of these new assets that are now interacting in our electricity network, and whether that's working at the grid scale with utility scale renewables, and the need to integrate those assets, and at the other end of the spectrum, all of the rooftop solar that's coming on, and making sure we're getting the most out of our distribution networks and getting the best outcomes from consumers by maximising the value of that energy. It's the technology and systems that are going to enable that, that are, I guess, key to making that transition as smooth and efficient as possible. There's also the ongoing need for technology and the associated infrastructure to support other elements of the transition. So on the electric vehicles front, clearly the electric vehicles are available, but you need the enabling infrastructure that's to charge fleets of vehicles, the grid upgrades, the capacity to host charging facilities is just another example of how both technology and infrastructure are critical to enabling that energy transition.
One can't overstate the integrated nature of infrastructure and how important it is to assess the multiple different parts and the cumulative impact of all of those. Ruben, I might again come back to you. How is GRESB and the infrastructure assessment covering climate change and risks, and what can we expect going forward?
Thank you. And once again, I'll share my screen with one of the some of the results from this year's assessment. It's good to note that this year we introduced some new climate-related indicators into our assessments, covering both transition and physical risk processes, as shown by fund managers and asset operators, that are in line with the TCFD recommendations. And what we did is we analyzed the adoption of climate-related risk management processes and found that, again, assets in Oceania are leading the other regions, so hooray. And the majority indeed is identifying both transition risk and physical risks. However, less than half of the assets also assess the impact of these risks. And I believe that we can expect those kind of practices to increase in the coming year, especially because stakeholders, including institutional investors, but also regulators, now have broadly acknowledged that climate-related risks indeed pose financial risks to financial system and companies, as Sandra already mentioned. And of course, that in return will adversely impact investment outcomes for investors. So as such, investors want to understand how these risks might impact the asset's operations, as well as the intrinsic value of the assets, because of course that also will inform an outlook in terms of sustainable and stable returns that can be provided by those investments. I'd also briefly like to highlight that we have been working on a TCFD alignment report. So that's a new product, climate-related product, both for GRESB real estate as well as GRESB infrastructure participants. And the report will show how infrastructure assets align with the 11 recommendation disclosures from the TCFD, which is based on existing information reported to the GRESB assessment. So we're certainly not increasing the reporting burden. And the benefits are that those assets that are aligned with TCFD can promote this to their investors and of course all kinds of other stakeholders, while those that aren't will be able to see where they can or should improve their alignment, but also they can see what their peers are doing. So if the majority of their peers are looking at a specific action or process that they have to disclose on, they can copy again best practice or perhaps even common practice behavior. And yeah, I believe this will definitely help increase the adoption of best practices regarding climate risk processes and assessments. So we are looking forward to release this new product, which will be launched, small disclaimer, but it should be launched in Q1 of next year.
Thank you, Ruben. Now in the Q&A, I am going to acknowledge Rachel's asked a question, and Rachel, the GRESB team have seen that question and they will get back to you directly. On the assessment, Ruben, a question from Matt Brennan, who's online today. Will the climate responses be scored in 2022, considering your provisional release date?
Yes, thanks, Matt. Thanks for joining and for the question. Yeah, so typically what we do is when we sort of introduce new indicators into assessments, then in the first year they're not scored, so everyone get familiar or can get familiar with the question itself, what kind of information we expect them to report, what the reporting requirements are, and so on. And at the same time, we can already show, what you are doing compared to what other fund managers or asset operators are doing. So that happened with the new climate-related indicators in the assessment this year. For this particular new climate TCFD alignment report, we actually will come with a scoring mechanism that allows companies and investors to see to what extent parties score high on certain alignment criteria. For next year, for all new indicators in relation to climate that weren't scored this year, it is indeed our intention to score them in next year. And of course, we will do so in terms of developing the scoring mechanism in close collaboration with our different stakeholders.
Thank you, Ruben. Now, we've seen many countries set clear net zero carbon targets. We've seen governments starting to mandate reporting on climate risk in line with TCFD recommendations. In the EU, Sustainable Finance Disclosure Regulation imposes mandatory ESG disclosure obligations for asset managers and also other financial market participants. Now, the states and territories across Australia and New Zealand have made similar commitments over time, and I think we've seen an important shift from the federal government in the past few days. Maybe starting with you, Eva, what do you expect from policymakers and regulators here in Australia, and how do you think that's going to impact our infrastructure industry?
What I've observed in the ESG area is that I think corporate Australia has voluntarily moved ahead of regulatory requirements. So in a way, I think it's probably a moot point now. Shareholders, fund managers, communities have made it clear that ESG reporting and performance is a baseline expectation, not a nice to have. So whether it be around diversity, ethics, transparency, or biodiversity, what I'm seeing is that corporates are moving much, much more quickly than any policy or regulation. And the last reflection I had was that I'm seeing employees expecting companies to perform in the area of ESG. We all know there's a war for talent at the moment and resources are scarce. And my teams are telling me often it's the first question people ask when they're coming in, looking at whether they'll join a company. They're saying, how do you approach ESG? What are your KPIs and how's your performance? So in many ways, the debate's moved on, but I'm very hopeful that policymakers will catch up.
Thank you, Eva. Ruben, from your perspective, the GRESB assessment's always evolving, as well as the results. Any particular highlights in how things might evolve in the future in relation to ESG regulations?
Yeah, I think the most important developments there come from the European Union, where we've seen the Sustainable Finance Disclosure Regulation, or in short SFDR, come into effect early this year and into full effect next year. And that mandates all kind of financial market participants or parties that sell or offer financial products to report on a number of environmental and social impact indicators. So yeah, once something becomes mandatory in terms of disclosure and being able to report on metrics, then of course the whole industry moves towards, okay, so how can we do this? What are the tools that are out there? And at GRESB, of course, we want to be able to further support our stakeholders that already report some of those impact indicators via our assessments. So what we've done is we've done the mapping with SFDR regulation, and we will launch an SFDR reporting solution in terms of where those mandatory impact indicators currently are not yet covered by the assessments, will be covered by a complementary assessment. So that allows companies or managers and operators that already report to GRESB to continue doing so. And at the same time, also to be aligned with those regulations. And yeah, obviously we're talking to many different policymakers around the globe in different jurisdictions. And I guess that once we've have some experience with how we approach this SFDR regulation in particular, that once policy regulations will come into effect here in Australia or be it elsewhere, that we can provide a similar reporting solution with a clear aim to make sure that data is standardized, so easy comparable, is properly validated. And so what is being reported indeed makes sense and reflects the true situation. But also to provide a one-stop reporting shop, both to investors that want to see to what extent their investments are aligned with regulations or perhaps not. And at the same time for fund managers and asset operators as well to see or to use that information to be compliant with regulations and also to communicate that to their stakeholders. So for us, we're on top of it. It's interesting to see how much, I wouldn't say havoc, but definitely dynamic it creates in the European Union. And as we can see, governments around the globe are really making strides to put at least transparency on those impacts to the top of agendas. So I expect that before too long, we're going to see similar regulations, or at least the contours of those regulations here in Oceania as well.
Thanks, Ruben. And maybe staying with you, the last year has been probably some of the most uncertain times we've navigated with all sorts of adversity. We've had both a health and economic and to some extent a social crisis. Were there any surprises or notable trends that you'd like to highlight from the 2021 results?
I guess the most notable ones are that even though last year many of the assets, like within the transport sector and within the healthcare sector and all kinds of other sectors that indeed were impacted by COVID, were mostly focused on navigating through the pandemic. Some of them took a reporting break just to make sure that whatever resources they had available to focus on the very urgent issues. But firstly, it's great that all of those assets came back this year to start or continue their GRESB reporting, because they understand that they want to be able to communicate what they're doing and how they been able to navigate the pandemic to their stakeholders. And secondly, what I showed is that suddenly since last year, well, not suddenly, perhaps as a logical consequence, there's this huge focus on health, safety, well-being among the asset operators. And we believe that that's a direct consequence from the pandemic, where, of course, we had to find new ways, better ways of thinking about health aspects on site, operating assets, and so on. We expect that trend to continue. So it's not like now that everyone is being vaccinated or getting vaccinated, done, and we look forward. This will become ingrained into how assets and funds operate in terms of their policy, strategies, and actions.
Thank you, Ruben. Maybe in terms of policy and strategy and actions, Sandra, did the pandemic have any impact on your investment decision-making and engagement process over the past year?
Yeah, absolutely, Ainsley. I mean, I think it had a huge impact, right? And it definitely created a lot more engagement between us as sort of asset owners and our underlying portfolio companies and infrastructure managers. It's fair to say, COVID's impacted the infrastructure sectors sort of quite differently. It was almost two parts to it. Some sectors have been more impacted compared to others. For example, in transportation assets like airports and toll roads, they have been, obviously significantly affected through the lockdown and movement and travel restrictions imposed. And then in other infrastructure sectors, like mobile towers and, utilities, they were sort of broadly largely unaffected. So, it was sort of in two parts. So there were sort of winners and losers, so to speak. So that was broadly how we saw it. So, but for UniSuper, I guess that sort of went back to the resilience of portfolio construction, where you sort of, have not only all sort of transport assets, but we've got a diversified portfolio. So in many ways, the portfolio was resilient. And then in terms of a shift in ESG focus, Not really, actually. I think, you know, it probably brought some other issues to the forefront. And I think ESG was definitely not less of a focus. And I think my other comment will be, despite COVID, there's been no slowing of momentum in the race to net zero 2050. You know, we're seeing very ambitious decarbonisation plans around the world. You know, there's now pressure on fossil fuel companies to transition their businesses. And you know what? I think that's intensifying. So the risk of some assets becoming stranded is also increasing. So those were some of, you know, my immediate sort of key observations.
Thanks, Sandra. With that transition and some of the shift happening, there's also a much greater focus on social outcomes, because oftentimes stranded assets leave stranded communities and stranded workforce. In terms of social outcomes, Eva, maybe turning to you, could you tell us a little bit about your social value programs, community partnerships, or modern slavery initiatives that you have underway?
In our business, we have a very large regional and rural footprint, both in terms of our existing traditional poles and wires businesses, but also the growing connections business to large-scale renewables. And of course, the interconnection projects that we're building along the East Coast to connect the NEM. So we're increasingly playing a bigger and more high-profile role in communities. And what we recognise is that we have to partner with them, and it has to be genuine, true partnership. And that's the only way we can build engagement with the communities. So we have a dedicated partnership program, and we give out significant amounts of money, time and resources each year, everything ranging from rural women's issues, First Nations scholarships, safety initiatives, etc. Last year we had 27 winners in our program, based in all sorts of different rural and regional and some urban areas as well. So it's a very, very, very important focus for us. I mean, you can imagine, as anyone building large-scale infrastructure knows, it's a very daunting prospect for many communities to have such large infrastructure built in what can be very pristine or well-loved communities. So we're very focused on making sure we develop strong partnerships. And we've recently put in place 2 new initiatives that we're really proud of. One is that we have place managers wherever we're going into a community. So we have someone local who understands and knows the community, and they're really the person that people can go to and talk to about any issues. And they're the intermediary that comes and explains to us from a sort of first person perspective what the community is looking for. And then the other one is transparency. And we recently established an Officer of Landowner and Community Advocate. And this is a very highly regarded independent expert who audits and reviews us and tells us the hard messages of where we need to improve, and make sure that as an executive team, we're hearing the honest and direct dialogue straight from the community. So that's another really important part of the way we're doing business with communities.
Thanks, Eva. And to wrap up our panel today, a question for all of you on the call, and I encourage you to use the chat function to share your answers. But to each of our panelists today, who I think have done an excellent job in sharing some of the trends and challenges that are happening across infrastructure at the minute. If we project 10 years from now, we're in 2031. In terms of ESG, what do you see the leaders doing? And Lachlan, to kick off that challenge, I might throw to you.
Thanks. Look, I think leadership in this space picks up on some of these things. It's transparency, but also probably very, very front and center, almost real-time reporting. And certainly it should be real-time business information on ESG metrics that's available to inform day-to-day decisions. It becomes integrated into business decision-making, I think, is what leadership looks like.
Thank you. Sandra, what are your thoughts?
Sure. Instead of one sentence, I think, we will see the rise of the alphabet or letter S in E, S, and G. And the second one is just with COP26, right? I mean, I think it's not going to be just the public sector watching closely around the summit. Companies, businesses will all be paying close attention, and we think we'll see a bottom-up shift with the private sector driving a lot of action to combat climate change.
Thank you. That private sector is certainly pulling their weight already. And Eva, your thoughts?
I think the leadership for me has two components. Firstly is that the private sector continues to lead and innovate and not wait for regulation or policy, and to take risks in doing that. So try new technologies, innovate new products, new services. And then the second one is staying really close to communities and the public, because expectations on ESG evolve, and we need to make sure that we're listening very deeply to ensure that we're meeting society's expectations.
Thank you. Well, I'm going to sign off for now from Warramai land and ask you, Ruben, if we come back to the present times, what does leadership look like right now? Over to you.
Well, right now, we definitely say that the leaders are showing the industry and stakeholders that their ambitions are more than just words, right? They're taking actions and they're making sure that we are creating a more resilient, net zero carbon and industry or sector that is able to provide those positive environmental and social outcomes to different stakeholders. And indeed, that's also one of the reasons why we want to appreciate the sector leaders in the infrastructure assessment and benchmark. So sector leaders typically are the different funds and assets that are the best or scored the highest in their respective region and sector. And let me quickly again share my screen. And this year, in recognition of those sector leaders, we've divided to plant another forest in collaboration with TRIDOM, which is a certified B Corp that meets the highest standards of verified social, environmental performance, public transparency, and legal accountability. And importantly, TRIDOM balance profit and purpose with the idea to work with local communities around the globe, plant trees, obviously, that do not only absorb carbon and combat soil erosion, but also provide other environmental and social benefits to the community. So they support communities with additional food sources, economic opportunities, and so on. And yeah, so we think it's a very inspiring program to work with, and of course, something to be very proud of. And again, it's in recognition of those sector leaders. So for the sector leaders, a little drum roll, please. For Oceania, first we have Morrison & Co. and Queensland Airports, also managed by Morrison & Co., by the way, taking away the Fund Sector Leader Awards this year. And we also have Kogar Wind Farm and Perth Airport winning the Asset Sector Leader Awards. So congratulations. Moreover, we also have a Most Improved Award with, again, 2 funds managed by Morrison & Co., taking away the awards for Most Improved Funds. And we have a number of infrastructure assets that also showed the strongest improvement year on year in our infrastructure asset benchmark. So on behalf of everyone at GRESB, congratulations on your outstanding job. And now I'd like to hand over to one of the takeaway winners who've sort of swept all awards away, John College, who is Sustainability Director at Morrison & Co. for his testimonial. John, over to you.
Testimonial. Thanks, Ruben. Good afternoon, everyone. As Ruben mentioned, I'm the head of sustainability at Morrison & Co. And really, I'm here just to provide some kind of insights into why we think GRESB infrastructure is important. But before I do that, I just wanted to say a wholehearted congratulations to everybody involved in GRESB infrastructure this year. A huge effort. I can definitely vouch for that. And we are genuinely leading as a group to positive change in our sector globally, which I think is absolutely critical. So just really quickly, I'm conscious we're running tight on time, so I'll really quickly fly through this. But what does GRESB mean to us? Well, really, most importantly, GRESB allows us to communicate ESG expectations and performance to our stakeholders as the single most important thing. Whether it be a trustee board, a a management team, a service provider, whoever it is, we can talk very simplistically about ESG performance, and that is really powerful. And if we want to go forward on this journey, we have to get non-ESG people kind of on the journey with us, and simplifying the communication is what it's all about. GRESB also provides us access to a really consistent ESG data set across our portfolio, and we've got 40 odd companies in our portfolio, and we can get like-for-like data across all of those just through GRESB once a year, which allows us to focus our efforts on the conversations that we think are more strategic around ESG and how we take these companies forward. What does it mean to be a sector leader? Thanks, Ruben, for kind of highlighting that for us. But really, it's nice to see everyone being recognised for all the hard work that goes in. But fundamentally, it's not the be-all and end-all. We just genuinely ask our companies to achieve 90% or more. Anything beyond that is a bonus in GRESB, and we're really proud of where the companies have got to. What differentiates Morrison & Co? Well, fundamentally, our purpose is to invest wisely in ideas that matter. We've always invested in the right things. And with our incoming CEO, Paul Newfield, we think that will continue for the long term. And so I'm really proud of that. We take ESG really seriously. Our board is 100% engaged with ESG and making sure that we're tracking forward on climate change and modern slavery and GRESB performance and all the rest of it. And our investment teams are also on board. And with GRESB's assistance, we can actually simplify the message to those people, because they are very, very busy people, and we need to work out a way to communicate with them really easily. I think the key differentiator is that we have a bespoke program for each of our funds and products around the business, which allows us to really properly engage with the relevant stakeholders in Morrison & Co. And I think I have to say as well, we have a great but small ESG team. We're very close to the action. We're buried in the investment team, and we're close to everything that goes on, which is fantastic. At the asset level, I think our key focus at the moment is the governance of ESG, making sure that management teams and boards are fully clear on what's expected of them. We've got good investor alignment, and from there, management teams can just get on with it and deliver our expectations. And I suppose also helpful is the fact that we make ourselves available to these companies to whatever extent they need. Quickly on Utilities Trust of Australia, which has been a fantastic journey since 2018. When we came into that business, we took on the management of that fund in 2018, and honestly, some of the assets were performing less than 30%, and now suddenly we've got 4 out of 9 of them are sector leaders. 8 out of 9 are in the 90s. One of them was at 99%. So we've come a long way in the 3 years, and that's taken a lot of hard work by many people, including the UTA board, who fully supported us on that journey. And I think the telltale sign of progress that they've made across that portfolio is that we didn't really get too involved this year with GRESB. Historically, we've been hand-holding and all the rest of it, but this year there was none of that. Transgrid, didn't hear a peep out of them, and suddenly they popped up and into the 90s, second in their peer group and smashing it. So before I sign off, I just really wanted to quickly say, congratulations to the GRESB team. What they've achieved this year in really tumultuous times has been incredible. Not only has the tool improved, infrastructure assets are really complicated, participation's gone up, and this is all done in the context of an ownership change and a massive restructure. So I really think you're coming into your own, and I really thank you for that. And I'm really keen to be on the journey with you over the next few years. So thanks, everyone, and back to you, Ruben.
Thanks, John. Very kind words. And of course, thanks again for your leadership and ongoing commitment. I guess it's through these kinds of, performance improvements and that we as an industry also are able to innovate, challenge ourselves and push forward to just get better, as you mentioned. So thank you and the others for leading from the front. And again, congratulations with your great achievements. Now back to Mike to close this event.
Thank you, Ruben. And noting that we are bang on time, or perhaps a moment or two over, I'll just do a very quick thank you to the participants on today's discussion. So Ruben and the GRESB team, great work putting all this together. I know there's a huge amount of work goes into these events and the information that sits behind them. So great work. To Romilly and Ainsley, thanks for your input and your steering of the discussion, and for our panelists, Sandra, Ava, and Lachlan. And John, congratulations. Great to see you picking up a number of awards, and looking forward to more next year. And thanks lastly to all the attendees, all the participants who've been putting forward the Q&A and involved in the chat. It's great to have you all part of the process. So thanks all, and have a good evening.